Okay, so let me change what I'm sharing with you guys. Please tell your friend they should not disturb me with recording because problems happened. It's only the audio. Okay. Please make sure that you share this and disturb me. Okay. Are you able to view the screen? Please confirm. Daniel? Daniel, are you on call?
Yes.
Okay. Let us look at the requirements. Let us look at the requirements. Part A. Using exhibit 1 and in accordance with, let me check 1 second. I hope it is at least recording this. This is the practice part. Okay. In accordance with IS 21, explain why Nomstraco's functional currency is the NY, and these are 5 marks. So Daniel,
Yes, sir.
what are you going to look out for in exhibit 1? The 4 conditions, not so?
Yes, sir.
So let us go to exhibit 1. They want us to prove why NY should be the functional currency of the subsidiary NCO. So Daniel, can you read? Can you read?
Yes, I can.
Mm.
Nomstoco is a foreign subsidiary of Bionico Company. The foreign currency of NY. Nomstoco's sales and related costs predominantly denominated and settled in NY.
So that is the
company.
let us read and interpret. So, and these the first 2 conditions, the primary, and these the primary factors.
Yes.
So these are the primary factors, meaning that no, we have sales, then the costs. Remember there were 2.
Okay.
Okay. So we have that, very important. How can you continue?
Yeah, the company had previously provided a supporting loan in dollars to Nomstra Company, which had been settled during the year, and funds from the financial activities are currently generated in NY.
Isn't this the part C of primary condition? No, of secondary condition. The currency in which we raise what?
Financing of
Yes.
activities
Eh,
of Nomstra.
the currency in which you raise funds. Perfect.
Now, straw companies board. Yes, board of directors is free to determine its decisions independently from the board of the owning company.
What is this? What are they trying to tell us?
They have autonomy of their
So isn't that enough to confirm?
Yes.
Isn't that enough to confirm that NY is the functional currency of N?
Yes.
We have 4 points. We have sales, we have costs, we have financing, we have autonomous decision making. So would you fail to get those 5 marks? So we all know that you first state what the standard says. You talk about those 4, the primary factors and the secondary factors. Then you apply. You talk about the first factor being past, second one past, third one past, fourth past. Then you conclude that therefore NCO is right to take NY as the functional currency. Sharon, is that okay at your end?
Yes, sir.
Okay. We go to question 2. With regards to 3 issues outlined in Exhibit 2, so we have to open Exhibit 2. Discuss with calculations how to correct the treatment of NCO in the consolidated financial statements of PICO for the year ended 31st December. 10 marks, imagine. For sure, question 1 should be a free thing for everyone. Let us check and see what is there that these guys have done wrong that the examiner wants us to change. Exhibit 2. 3 issues. On 1st January 2022, PICO acquired 75% of 1.5 million NY ordinary shares of NCO for 1.1 million. So we have the cash consideration. Have you seen it, Daniel?
Yes, 1.5 million.
Cash consideration is what?
No, it's 1.1.
1.1. Please be serious. The 1.5 is capital, share capital of the subsidiary. It acquired 1.5 million NY1 ordinary shares, meaning that 1 ordinary share, the nominal value is 1 shilling. I mean 1 NY. When the retained earnings of NCO were NY 4.8, so we have the opening, the retained earnings at acquisition. Retained earnings at acquisition. Okay. There were no other components of equity. PICO determined that the NCI in NCO had a fair value, very good. So NCI is measured using fair value of 2.7 million at acquisition date, implying that we are going to be dealing with full goodwill, which must be shared between the NCI and the parent. During the year ended 31st December 2022, NCO reported a loss of NY 900,000. So these guys didn't make a profit, but rather earned a loss. They earned a loss. And of course, this loss should be shared between the NCI and the parent following their ratios, just like the way we do it for profits. No dividends were paid or proposed. On 31st December 2022, NCO reported total equity, net assets, was NY 5.4 million. Perfect. They have given us the total assets of the subsidiary at this at reporting date on 31st December 2x2. NCO's reported total assets was 5.4. Okay, this is good. Of course, the exchange difference will come in, the exchange loss will come in because they are giving us the final figure in EY and NY. Exchange rates are given. Now, what are the issues? This is like the background information. What were the issues? The first issue: goodwill arising on the acquisition of ENCO was calculated incorrectly as 725. This is also the amount included in the draft consolidated statement of financial position. In arriving at this figure, the NCI at acquisition was translated and recognized using the exchange rate at 31st December 2x2. The calculation was as follows. The calculation was as follows. Okay, so these guys used instead of using remember we said when it comes to this, the calculation of goodwill, what do we do, guys? We should translate goodwill at acquisition also using this figure here, the 12. But for them, they used 31st what? This one they got it wrong from. They converted NCI using the reporting date rate. And then for net assets, it is okay, they calculate very well. So they end up getting a wrong figure. So what are we going to do? Then what should we do? Don't we have to calculate the correct figure?
Yes, we have to recalculate.
Okay, I'm sure I've showed you how we calculate this, but let us recalculate it together. Okay, so you can have here your goodwill at acquisition, because that is the first issue you need to handle. Okay, so we have our consideration. How much is the consideration? Is issue 1. Daniel, what was the cash consideration these guys paid?
1.1 million.
We need to confirm. Okay. On first, acquired 1.5 for 1.1 when retained earnings was this. Okay, remember we said that remember this is 1.1 million, but we have to calculate our goodwill using what? We have to use NY, not so the functional currency of the subsidiary, right? So can you convert for me that 1.1 to NY? How much do you think it will be? What is the value? What is that value? How much is it? You have 1.1. You see, this is very tricky. We are supposed to calculate goodwill at the functional currency of the subsidiary, because that is the concept. Goodwill at acquisition, bracket, functional currency of the subsidiary. which we've already confirmed it is NY in part A. So if these guys paid, we can have here, these guys paid in dollars, they paid 1.1. Okay? 1.1. Perfect. Which rate have you used? Which is trade-off. So what is the NY in millions? Okay. 13.2. Give me 1 second. This is using NY. We can maintain million. Okay. So this is going to be, do we divide or multiply? We multiply. Let me hope everyone can be able to see that. So you get this dollar times this 12. Okay. What else do we look at in calculation of goodwill? Is it NCI?
NCI acquisition.
What was the NCI at acquisition? Was it given? Are you seeing the 2.7?
Yes.
Okay. So the 2.7, okay. For it is NY, not so? So 2.7. What do we do next? Less fair value of net assets. And is it given? What is it? When you read it through, what is the fair value of the net assets? Where is it? Where is it? Where is it? That is retained earnings. 4.8 is retained earnings. Are you seeing this 2.7? No, that is NCI. During the year, reported a loss. Okay. They gave us the assets. Where are they?
The ones they gave us to at the reporting date or
yes.
Of 31st December. Probably we have to
use working. No. Working note number 2. What does it say? Is it net asset of the subsidiary?
Yes.
You don't have to forget those concepts. What do we include? Share capital? Not so? We include share premium? Do we include retained earnings?
Yes.
Then fair value adjustments. Is that true?
Yes.
That is working note number 2 of consolidation. So what is the share capital in this question? Of the subsidiary? Are you seeing this 1.5? They will not tell you in the exam. Daniel, are you seeing this 1.5?
Yes, I am.
Isn't it share capital?
Yes.
So this is 1.5 share capital. So here it's going to be 0, no premium given. Retained earnings. Have they given us retained earnings at acquisition? 4.8. Is there any fair value adjustment? Of course, no. So what is the total? You just say equals sum. There will be no formulas in your spreadsheet. So just do that. So what is the total assets of the subsidiary at acquisition?
6.3.
Sharon, are you able to see that concept?
Yes, sir.
So this is, you just say equals, you reference to this one. Okay. After that, what do we do? Do we have our goodwill? This should be negative, not so, because we are lessing. Just put equals negative. So we say our goodwill should be equal to the sum of that. Once you've put a negative, again, don't say, okay. So that is our goodwill at acquisition. Goodwill at acquisition. Daniel,
Yes, sir.
is there impairment?
No.
They didn't mention it. Okay, working note number 2. I mean this under, are you seeing this one? That at 31st December 2022, a goodwill impairment of NY 3.3 was calculated but not recognized in MCO. Isn't this one against the standard? Are we not supposed to reduce the goodwill at reporting date?
Yes.
Okay, so supposed to get this. So this was also an error. The group policy is to translate goodwill impairments at the average rate of exchange rate. The examiner even gave you a hint that you translate goodwill using the average exchange rate. Okay, so we said we have to convert. For us to consolidate, we must convert the goodwill at acquisition and goodwill at reporting date, not so, to the presentation currency of the parent, which is dollars. So need here our dollar. You can say $1,000,000. Okay. So we have here goodwill impairment. With goodwill impairment, okay, they are telling us that it is how much? It is 3.3, right? So it is 3.3. It should be negative 3.3. So what is our goodwill at reporting date? It is just this. Since I've already put a minus, I will add. It is 6.3. Now we have to translate our impairment. I can put here the rate. And we are translating this this goodwill at acquisition, the 9.6. Which one are we going to use, Daniel?
What exactly?
Goodwill at acquisition.
We are going to use the historical
The 12. Perfect. Are we multiplying or dividing? Okay. 0.8 million. Okay. How about impairment loss? We use which rate? Of 15. We divide or subtract? Okay. Now at reporting date, which rate we use for goodwill? 18. You see how things can be moving? So we divide. So, meaning that the goodwill was supposed to be, how much is that in millions? Okay, in thousands. It was supposed to be this one times 1,000. Was supposed to be 350. But these guys recorded how much? Daniel?
725.
So are you saying that we need to do some adjustments?
Yes.
Okay. So let us now, with these calculations that we've made, we know that our actual goodwill is supposed to be 350. But these guys have a goodwill in their financials of 725. Now we need to know what is the adjustment that we should make. Okay, one. Let us go one by one with this calculation. Okay, now we want to see the adjustments that we should make in our pre-populated spreadsheet. Okay, with this calculation, is the consideration having any problem? Of course, no. Are we getting it? If you want to see the impact, you can even translate this NCI at spot rate, the fair value assets at spot rate, the goodwill acquisition at spot rate, then the impairment using average, so that you can compare like to like. Okay? But when you look at this interpretation, our NCI, our consideration is okay, 1.1. Our NCI is 2.7. What is 2.7 in dollars? Using the spot rate. How much are we going to get? Assuming that we translate this to 12, because that is it. 12, this one should be 15, because they're using average. So, how much is this one? What is 2.7 by this 12? Should be 0.225. Whereas for them, they are having 150 because they use the 18. What is the fair value of the assets? For them, they got it correct. They got it right, which is this, divided by that, divide by 12. Okay, which is that is okay. Goodwill acquisition was supposed to be 9.6 divided by 12, which of course we already have. Impairment, they didn't even consider it, so problems. Okay, I think let me just extend this one here. I just want to make it easy for you to understand how to adjust this, even in the spreadsheet, the impact. Okay. So, therefore here, of course, we have that same figure. We have this, divide by, to be 18. Let me put here 18. Okay. So, goodwill at the reporting date is that figure we all accept. Now, I want, meanwhile, when you get 0.8, okay, plus 0. Minus 0.22, how much do you get? Daniel, now I want to see the exchange difference. You get this, when you reduce this, you get 0.58. So what is going to be the difference here, Daniel? Should we put a positive figure or a minus one? Daniel? I think this is normal things we've been doing, not so? We have to get here the exchange difference, right? So how much do we put as exchange difference here? Because at year end, goodwill is 0.35. But when you consider our calculations, it is 0.58. So what should be this figure here? Is it a negative or positive?
It's a negative.
And how do we get it? We get we get this. So in Excel, you do it like that. Not so? So this is an exchange loss. No need of even saying exchange difference. Just say exchange loss. It is not a gain. Now the question is, in their draft financial statements, these guys have goodwill of 7.2 of 7.25, not so, of 7.25. Yet first we are saying our goodwill should be 0.35. Now we need to see, with our working and their working, what do we have to adjust in the pre-populated spreadsheet so that we can get the actual figure here. So I'm going to start comparing. The consideration is okay, 1.1. NCI, for them they are having it at 150. For me, I'm having 225. So what is the difference? What is the difference, Daniel? Now I'm going to put here my comments. Our NCI is this figure. Let me write it in thousands to match what they have. It is that. In thousands, it is 225, not so? But for them, they have 150. So what is the difference? So what are we supposed to do to NCI? Are we supposed to increase it? Now, the adjustment is going to be, we should increase our NCI by 75. But the question is, if you increase NCI by 75, what happens to goodwill? If we increase NCI, does goodwill increase or reduce?
It increases as well.
It increases. So here we're going to say that NCI and goodwill should be increased by $75,000. But have you got the interpretation and how I've come to the conclusion?
Yes.
Here you can put in brackets how you're getting that 75. You can put in brackets that 225,000 minus the 150,000. But these ones are dollars. Okay, can we now move down? Can we move down? Of course, fair value of assets, it is okay. It's what we have. Goodwill at acquisition, of course, we've adjusted. Now they ignored impairment. So how are we going to divide the impairment? Hello? We should take this impairment. Okay, let us just look at now the impairment we might leave. Though we are supposed to divide it between the NCI and the parent. We should just have a comment on it. We have exchange loss. We said this exchange loss has to be divided. For them, they're not having it anywhere. So we should comment about the exchange rate. The exchange rate of how much? I mean exchange loss. The exchange loss of dollar. Is it 230? Is it 230? Should be shared between the parent and the NCI. You can say i.e. dollar, this guy is on 75, so we should get the 230 times 75%. Then how much do you get? Daniel, how much do you get?
172.5.
Okay. We have 172. Okay, here is saying it is 172.5. 172. Since I'm working in thousands, should be that. And where is it going to be? To translation reserve, okay? To the translation. Sharon, do you remember this statement you are asking me?
Yes, sir.
The translation. So that is the exchange difference goes to the translation reserve, whereas now and dollar, what is 25% of the difference? Of 230. How much do you get?
57.5.
That is 57,500. 57,500. It is going to reduce NCI. If this was a gain, it would have increased the transaction reserve. But now since it is a loss, it is reducing. So this is 57. How much you got? 500. Eh? Charged to NCI. Okay. We have talked about the impairment loss of the 0.22. These guys that ignored it. Impairment loss should be shared between the parent and the NCI, i.e. how much are we going to give to the NCI? I mean to the parent, i.e. dollar, 75% of how much? Of the 220, I'm working in thousands. So how much do you get? Sharon and Daniel, how much do you get?
165,000.
165,000. Where is it going? The one for the parent? Impairment loss, where does it go in working notes? We have working note number 2, 3, 4, 5, 6. Where does impairment for the parent go? Retained earnings, i.e. charged or debited. If I can say charged stroke debited to group retained earnings. That is the portion for the parent. And dollar What is 25% of the 220? How much do you get? Someone is calculating?
55,000.
55,000. Where do we debit it? In the working notes? To NCI. So that money, I can put it here, debited to NCI. Debited to NCI. Okay. So, are you seeing how I have handled? I have compared their calculation of goodwill. Consideration was okay, no adjustment. NCI had an issue. It should be 225. They only have 150. So I have to increase my NCI by 75. But increasing NCI by 75, it also increases goodwill. It comes to, when we come to fair value of net assets, we have 220, we have 525, they have 525. Okay. This goodwill we already adjusted for impairment. This one, since this is fair value method of NCI, it is a full goodwill, so we should share the impairment between the NCI and the parent. And these guys had already ignored it. Then exchange loss, of course they don't have it. We share it between the parent and the NCI. So with these 3 pointers, we've passed part B, but we've also secured our populated spreadsheet. Let us move to the next issue. No ENCO's assets and liabilities, excluding goodwill, were translated into dollars using the exchange rate as at 31st December 2x2. That is okay. The same exchange rate was used to translate. Perfect. Daniel, can you tell me what is the problem here? Daniel, what's the problem there?
Yes.
What is the problem there?
Those were supposed to be translated using the average rate.
Perfect. So that is in error, not so?
The rate they use.
Huh?
What is the separate exchange rate they are talking about?
And for them, they use the one for closing. Exchange rate, you see again? Now we can also comment about that issue. We can call it translation reserve. That's why they took it, right? Translation reserve. So we say, as per IS 21, profit, all those items need to be translated using the average exchange rate. As such, using the closing rate was in error. So I'm supposed to do the correct thing now. Sebo, are we supposed to do the correct thing? So these guys, they are saying that where was they recognized a loss of 175, not so?
Yes.
But first we are going to say if the loss for the year, let me get this put down here. We are dealing with this is NY. We need the rate, then the dollar. So what these guys did was the loss was 900. They used a rate. What is the closing rate? It is 18, not so? So these guys used 18 and they go to which figure? We get this, divide by that, 50. Yet the actual rate would have been, loss for the year, would have been the average rate. Average rate is what? Is it 15? It is 15. So this is 900, would have been 15. So this is supposed to be this divided by that. So what is the difference? These guys recognized a loss of 50, yet the loss was supposed to be for 60, not so? So did they understate the loss?
Yes, sir.
Okay. So we have this 60 minus the 10. So we can conclude that NICO non-structures loss was understated by dollar 10 what? 10,000. As such, it should be increased by the same amount. However, since we are increasing it by the same amount, this loss has to be shared between the parent and the NCI. Is that true? Is that true, guys? You guys, you respond. Is that true?
Yes.
So, and remember this loss, it should be divided between the parent and the NCI. Because if it was a profit, we do the same thing. Therefore, dollar, what is 75% of the 10,000? Is it 7,500? Should be debited what? Daniel, why should we take this? Why should we take it? Perfect. Group retained earnings. And dollar, will it be 2,500? Should be debited to NCI. Okay, but remember, dear students, these guys also committed because them exchanging at 18 instead of at 15, there is a challenge that there is an exchange loss on the translation. But how can we know that? Let us move back. to, okay, the resulting total exchange rates of 175 has been included in the translation reserve in the consolidated draft, draft consolidated, with no entry made to NCI reserve. Of course, we've divided this, but the argument is when it comes to exhibit number 3, do we have anything there? No. How about exhibit number 4? Okay, let me check. What is the requirement saying? Discuss with calculations how to correct in the consolidated financial. Okay. I have corrected because I'm looking at, with this error, it is just an understatement in the loss recognized. But we should be having also translation. We need to know what was the retained earnings. Okay, that is the net assets of the subsidiary. Then we translate it at year end because that is the requirement. Otherwise, if we don't do so, then for us to consolidate here, it won't be very easy at this point here. This one here, we are supposed to correct that 175. One, with the translation reserve, I mean with the exchange, the translation exchange gain or losses for the assets that we have to translate. When we read exhibit 2, these guys talk about assets somewhere. Where is it? Where is the net assets? Okay, here. Hello guys, we have this. On 31st December, Nomstraco reported total equity net assets of 5.4 million. Of 5.4 million. But Nomstraco reported total equity of 5.4 million. Okay? But remember, the initial value was, we even found it here. How much was it? Is it 6.3? This figure here. Total assets. It is this one, where they got it here, total assets. They have 6.3. However, for them they are reporting at year end, they are reporting 5.4. So we need to translate these assets so that in the translation process, there is a figure that should affect the translation reserve. I don't know if you, yes, please.
The 6.3 is the assets acquisition.
Yes, true. But at year,
assets at reporting date.
true. So do you have to translate that? Yes, we have to. You get it, eh? Okay. So now we have now to get the translation. Exchange loss on translation. Exchange loss on translation. On translation of subsidiary net assets. They are telling us that at acquisition, okay, I need also to put the rates. Here we have my NY I'll have the rate, then I can have the dollar. So at acquisition, these guys' assets were, in fact, this is more like working note number 2, where this, okay? Then the rate at that date, we're supposed to use the 12, right? Because it is at acquisition. We get this figure. We get this divided by that. Then we have at reporting date. But remember, from working note number 2, let me just take this as working note number 2. Working note 2. We have at acquisition this figure. We have at reporting date. Then we have the post-acquisition movement. That's the normal thing, post-acquisition movement. So at year end, they are not splitting for us the figures. They're only giving us 5.4. So let's come and put, remember I have the profit for the year, where's 5.4? Should be around here at reporting date. 5.4. But remember, we had a loss during the year. So this loss during the year should reduce the opening balance. So meaning that here, under retained earnings, we have a loss. I don't know if you're getting it. Of how much? Of 900. Is that true? Daniel, is that true?
Yes, sir.
Okay. So I'm going to translate this loss, the closing figure, I compare it with this. You realize that there's an exchange difference. So I can put here loss for the year, because that also affects the assets of the subsidiary. The loss was 900. And we always translate the loss using the average rate, which is 15. So this is going to be this value, we divide by that, which is a 60. Okay. Okay, then here we have, wait, if this is 900, this should be 0.9, not so? Because we're working in millions. We are working in millions here. Otherwise, it will become a problem. Okay. So they told us that at year end, at reporting date, these guys had assets worth 5.4 million. So 5.4 million, we're supposed to convert it using the closing rate. Not so. This is the asset and reporting date. So we use the closing rate, which is 18. Put here 18. So you get this, divided by that. Hey, why is it saying false? This divided by that, 0.3. But Daniel, if you get 0.525, okay, if you get, now we are getting our translation loss or gain. If you get that minus this, how much do you get? Do you get 0.465?
Yes.
But what is the figure here? We have 0.3. So what does it mean? Did we make more loss here? First, to be able to get 0.3, we need a figure here, which is that minus bracket this figure plus that, plus this. So that is the exchange loss difference. The exchange loss, which is a balancing figure. And we said this exchange loss, what are we supposed to do? We share it between the parent, and it goes to the transaction reserve. Look at this. These guys are saying the resulting exchange loss of this has been included in the transaction reserve. So these guys took the full figure to where? To the transaction reserve. This is the statement I'm reading. They took the full figure to the transaction reserve, yet part of it should go to the NCI, meaning that the portion, I can say here, this should be shared between the parent and the NCI. So since full figure was taken to the translation reserve, there is need to remove the portion for the NCI. So what does it mean? We have to reduce our translation reserve by 25% of this figure. So meaning that dollar, this should be the 0.165 times 25%. Or I can take 160 so that I work in thousands. I'm going to divide that to the portion that should be given to NCI. Okay, so this is going to be 165,000. How much did you get, Daniel? 165 times 0.25. So is it 41 to 50? Dollar 41,250 should be reduced. From the translation reserve and taken to NCI, because that is their share. Okay, so the remaining part, I think we've fully discussed this. I'm going to share this worksheet. You guys can still read through and so I can pick some points. Okay, I believe we are all exhausted. But let me hope the concept has been grasped. Daniel, have you got the concept?
I guess I've got an example.
Okay, what I'm going to do, I'm going to share the Excel file. I'm going to share the Word document where we discussed from. I'm also going to share with you, I'm going to look for the final solution to this question so that you can use what we've discussed and put it in the pre-populated spreadsheet. Then is that okay? Yeah, because what is remaining now is this other part. What is remaining is part C, part Roman number 2. Add just the pre-populated spreadsheet response option to correct the draft consolidated. So since I've already discussed where these adjustments are coming from, You putting them into the spreadsheet is going to be very easy. And the spreadsheet is here. And the spreadsheet is there. Okay, so let me wish you a good night. I'm planning to meet you on Sunday so that I don't engage you on Monday. I let you guys now concentrate. How many of you are buying the idea?
Yeah, that's okay.
Or what we've discussed is enough? I let you guys now concentrate on your own, and I wish you the very best. There are two options. Okay, what I'm going to do, Daniel,
Yes, sir.
I'm going to put in the group an opinion poll of 3 options. Meeting you on Sunday, and the truth is, I'm interested in ethics. I know Ivan wants cash flows, but I'm interested in ethics. So the remaining session I have is to discuss with you guys the ethics question, because those are free marks. I want to consolidate that one also. So I'm going to put in the group to meet you either on Sunday for ethics, on Monday, or on Monday for ethics, or I don't meet you. So you guys have a chance to tell me either to meet you on Sunday, or to meet you on Monday, or not to meet you anymore. The majority will take it. Have a good evening.